So hello everyone. Today we are going to learn about the another fantastic and very useful concept called divergences. And in this in this concept, we are going to learn um, about the another conviction, which is going to suggest us about the potential reversal of the patterns. So before we start about this topic, divergence, maybe to make this topic very easy to understand, maybe I'll ask you one question. Okay, and that question was related to the story or the film called Titanic. Okay, so what do you think? What was the main reason for that Titanic accident? Maybe anybody can unmute yourself and share your experience about the Titanic disaster. I mean, based on what we know, the story we have heard, the movie we saw, what was the main reason that anybody can share? What was the reason for the Titanic accident?
I think Titanic sank under its own weight. If it was a smaller ship, it would have survived. When
Right,
it hit the iceberg, because it
right,
was too big, so under its own weight, it broke.
correct. So, but before that, something happened. Maybe we are trying to do the root cause analysis, and because if we learn in this way, I think this concept will never, I mean, will always be there in your mind. So, Manisha, ma'am, I think you said very rightly. But before that, what is my take on that? If anybody, anyone
I
else
think
wants,
the person who was supposed to look out for the iceberg did not notice it.
yes,
He
correct.
missed the
That's also a
iceberg.
reason. Any other view from anyone? Okay, so I will tell about the my understanding, which I can correlate with this concept. So what I can say, the main reason for Titanic accident was the weight was definitely, Manisha ma'am said rightly. I will add on top of that, it was the momentum. Okay. So I mean, I think all of us has learned the physics. So momentum is equivalent to the speed or the velocity multiplied by the mass or weight of the object. So that is called momentum. So yes, of course, I think they saw the iceberg very late. They applied the brake also. Okay, but because the momentum was so much high, that means the velocity into mass, that is resulting momentum. So momentum was that much, so much high that even applying the full brake, the ship did not stop. It still keep on moving in a direction. Okay, so this example, if you can correlate with the divergence, it will be very easy to understand. So what happens that, okay, like for example, if you're driving
Do
a
you
car,
mean, Sachin, do you mean inertia?
um, I think inertia. I mean, if I mean, I don't want to go do it very deep into the physics, but here I think I'm making very simple is the momentum. Momentum is the speed
Okay.
into velocity, speed into the into mass, or velocity into the mass, or the weight basically, not mass, weight.
Okay.
Okay. So for example, if we sometimes we driving the car or the bike, okay, so even we apply the brake, okay, because there is a speed in the object or in the car, plus car has in its own ways. Even if you apply the sudden brake, sometimes the tire get skids and still it covers certain distance. Okay, even applying the complete, I mean, even if you have fantastic car and it works, I mean, it will not stop all of a sudden. If it has a good speed, it will still traverse. Okay, but what happens that as soon as we start applying the brake, the speed starts reducing. Okay, and it depends on the velocity of the vehicle plus the surface area plus the the tire. There are many other factors. How much distance it is going to travel even after applying the brake. So all these factors matter. So in this stock market concept or the technical analysis, that divergence is called. So maybe before going to theory, I will just explain you in the the practical use, and then it will be easy to understand the theory. Okay. So, okay, so there are two kind of divergence. One is called bullish divergence, and the second one is called bearish divergence. What is mean by bullish divergence? So, what's happened in a falling market? Okay, falling market is the price is coming down and down. Okay, so there will be, and at the same time, along with the price chart, we are observing these two indicators which we learned yesterday. We learned yesterday about MACD, RSI, and stochastic. So to understand the concept of divergence, we are using these two indicators called stochastic and RSI, okay, together, and then applying, reading it or looking at this particular, these two oscillators or the indicators along with the price chart. Okay, so just closely observe here the highlighted part, or basically where I'm putting the red line. So if you look at the first point where my this red line starts, I just joined the two lows of this falling market. Okay, so the first low, and after the first low, the price bounced back, it went up, and again it is coming down. And it has made the another lower low. Okay, so this is the Dow theory. That is the first theory we learned. So as per this, Dow theory, it is making the lower low. Or a very simple term, the price is going down as compared to the previous low. Okay, so that is the concept called, Dow theory of the, market is going down and market is making another low as compared to the previous low. At the same time, if you look at the RSI value of the corresponding price point, so this is the RSI value of the corresponding price point, and here is the another price RSI value corresponding to another low. Okay, so if you observe the price is making a lower low. At the same time, the RSI, it is not going as much low as the price. It is slightly up or equal. So in this example, it is slightly up. Okay, if you maybe I'll show you in the real chart of the same example or maybe any other example. But you have to understand that, so even the price is going down, but the RSI is not going that much. It is slightly up only. And if you look at the stochastic also, as compared to the same price point, stochastic is the first point is down, but the second point where is the price point is lower than the previous one, but the stochastic value is not low. It is the higher than the previous one. Okay. So here why I explain about this momentum theory of the tightening, that so what it suggests that, okay, even the price is going down, but their momentum of going down is decreasing. Okay, so RSI, the full form we learn about the relative strength index. So the relative in strength index represents that, okay, whatever is the move of that particular stock, the direction, it is not as strong as it was earlier. Okay, so even the price is going down or the lower than the previous low, the RSI is not supporting. RSI is saying no, it's not having that much strength to take the price further down. And that is, this concept is called a bullish divergence. So bullish means these two indicators which are plotted against this price point, it is starting kind of a bullish behavior. Bullish behavior means it is not going down as compared to the previous one, rather than it is starting moving slightly up. So, okay. So by looking at these two indicators, there is another very strong conviction. It provides that potentially, or it is very much possible that after, when we observe a divergence, is in this case bullish divergence, any falling market or any falling price point of any particular stock, it is not going to fall beyond this price point, or it may still fall, but it will the strength of the falling down may not be as strong as earlier. Okay, so whenever we are seeing such behavior of the price point or the chart against this RSI and stochastic, that behavior is called as a bullish divergence. And for an investor or a trader, then we can plan ourselves to take a bullish position. Bullish position means if we wanted to invest in some stock or trying to buy a particular stock, then we can start planning for that. Okay, because the price, these divergence, sorry, these two indicators are not going to go down, and they are showing some bullish behavior, and it is the right kind of a time to think about entering into the market. Okay, so that was the simple. It is not a simple. Sometimes many people get confused. Even when I, learn about this particular concept, it was very confusing for me. And I tried making it as simple as possible. Okay, but still, if anybody has any confusion, any question on this particular concept, feel free to unmute yourself and maybe uh, put up your question so that if needed, I can clarify it further. Any question from anyone? Okay, great. I assume no question at this point of time. So I will take it positive feedback. That means I was able to explain it very well. Fantastic. The next concept is called bearish divergence, which is just opposite. Okay. So before going to the bearish one, why it is called divergence? So the literal meaning of the divergence is that something, moving apart. So moving apart, if you look at this price point, the price point is that this slanting line is kind of a down towards right hand side. But if look at these RSI and the oscillator, wherever I am joining these two lows, okay, so in the bullish divergence, we need to find out two lows where the recent low is lower than the previous one. That is the falling, simply the falling market. So bullish divergence will be observed in falling market. Okay, so that means after the falling market, it is going to go bullish. That is what the simple way to remember. Ideally, you don't need to remember. It is just whenever such things happens, you can just use it. Even if you don't remember what is called, that is still okay. The main thing we should remember is that how to use them. Okay, it's like a driving. If you don't remember what is meant by clutch or brake or accelerator, you just know that okay, what are the pedal to use for the brake, clutch, and accelerator. That is okay. You can still able to drive. Okay, but if you know, you can remember. It will be easy. I mean, much better for you. Otherwise, just to use these indicators. Okay, if you just remember the concept by looking in the chart, that is enough for you. Okay, so why it is called a divergence means because they are making a kind of a drifting apart. If you look at the first point and the second point, it is a right hand side slanting into the price point for the price point. And when you look at the RSI and stochastic, it is the kind of this slope is reverse. Okay, so that means when they are plotted into the chart, they will be kind of a going apart towards in the backward direction. So that is the literal meaning of the divergence. But in this example, it is simple. Price point is making lower low. At the same time, the oscillators or RSI and stochastic is not making low, it is making a higher low. And that is the example, that will be the example of bullish divergence whenever you see in any of the chart, in any time frame. Time frame doesn't matter. It can happen in any time frame. Weekly, daily, monthly, hourly, 15 minutes, on so on so forth. Okay. So now the next one is the bearish divergence. So it's the same, similar concept, but just opposite. So in the bearish divergence, what it means that it first of all, it will happen in the uptrending market, or when the market, mood is uptrend, or when the market behavior is uptrend. Okay, in that case, what is happening that if you look at in this example, Okay, this is the Infosys weekly chart, and it is not very old example. It is recently. So this example is January 2022, last year's example. So this stock has made the all-time high. Okay, uh, and it was around maybe somewhere around more than 1800 or 1850 or so. Okay, so and if you look at the corresponding value of these RSI or stochastic, so here against this is called the lower high as compared to the next high. So this is one in the higher high, and the previous one was the lower high as compared to this one. Okay, so or a simple term, here is the one price point which is lower than the next price point. Okay, at the same time, if you look at the corresponding RSI value, so RSI value of this price point, that is lower price point, is higher than the RSI value of the highest point. Okay, so what it means that even the price is going up, okay, RSI is not accepting that moment. RSI is saying, not giving the, I can say the company, not giving that strength to go because of the momentum the price point has reached, because Infosys is one of the outperformer stock, I can say. So the price is keep on moving from this point of time. Okay, so it took around, if I look at the days wise, so it was around August. Okay, so from August to August 21, and here is a January 2022. So around 5 months, what it did, that price keep on going high and high, but RSI is not supporting. RSI is pulling the price down, not pulling price down. Basically, is trying to pull down the speed or overall momentum. Okay, and after making the all-time high, the price is started falling down. Same thing if you look at the stochastic also. So here stochastic value is the highest value against this same price point. But when the price moved even higher, stochastic is not moving into the same direction. Okay. So sometime in the real, I mean, sometimes it's also happened that, okay, you may not able to see divergence in both the indicators. But whenever you see the divergence in both the indicators, okay, so that is giving a very, very strong conviction that, okay, after a certain point of time, this market correction is going to happen. Okay, so I'm not saying that, okay, it is going to be entirely reverse. Okay, but it is not going to move up. And how it is going to help you, that suppose somebody has invested into the stock, somewhere here, maybe the early 2020, where the COVID situation was there and the price was very, very much down. Big correction happened in all the stock. Okay. And somebody has the very good faith on this company stock, which I personally have. I personally hold a good number of stock of this company, along with some other IT companies. So somebody suppose invested somewhere here, and then after, why we are investing? Because whenever it is the price is going to go up, we can able to get the benefit. So in the stock market, what happens? Okay, most of the time we just invest. The investments we take entry, but we not forget, we don't know when to exit. Okay. So in the stock market, I can say exiting is more important than taking an entry. So it's like flying, the aircraft. For the pilot, I think the taking off is, I mean, not as much important, as much as critical than the, landing. So landing is much more important than taking off. Anybody can, not anybody, I mean, comparatively, it is easier to take off than take landing. I mean, you can enter into the market, you can purchase the stock, but you should also know when to exit. So even you are not a day trader or position trader, even if you are just investing, okay, you are just purchasing a stock, and then you are waiting after a certain point of time. So you need to exit also, right? So having the knowledge, I mean, that is why I explained into my initial sessions that no matter who you are, either you are a long-term investor, you are planning to invest for 5 years, 10 years, but at the same time, we are investing because after a certain point of time, when the price goes up or when the good profits happen, we should be able to exit it. And in this, with these indicators, so you don't need to check your stock every day or every week. Maybe after a couple of months or sometime, maybe once in a quarter, you just check it, okay, how the things are going. And if you're a long-term investor, maybe put on a weekly basis. So this example of the weekly basis, okay. And then when we find that, okay, there are some kind of, situation is there, either you can plan to exit, or if you still wants to add some more stock, you can wait that, okay, after this point of time, there might be some correction going to happen in the market, and you can add more position. You can add more stock into your portfolio. So depending on your requirement, you can take a decision. I mean, that is up to you. But main important thing I'm just sharing here is how it is going to help you. It is going to help you to decide a right exit. Okay. Few more points. I mean, I just remember that. So never ever short, or never ever do the short selling for any outperformers. So like Infosys is one of them. So when you are planning to do the short selling, do the short selling in maybe some other which is not doing no, very, we are not doing very great. Short selling means, again I'm repeating, you are selling the stock first and then buying it later. So my recommendation.
Sachin, I was about to ask you that is this the time to short sell Infosys?
No, so that, yeah, so I think before Manisha ma'am, you asked, I was just mentioning that never ever short sell any
Infosys.
outperformers, and Infosys is one of them. So I personally don't short ever Infosys. Whenever needed, I will add more stock. Short selling means that I mean, you can do that, but provided that you need to be sitting in front of the terminal and watching and then doing that. I'm not, if that suits your personality, you can do. But as far as I know, maybe you prefer more of the positional trade or a long-term investors, and in that way, better it market. Let's correct, and then we may take additional position. What else we can do? Maybe for the sometime timing, whenever we have a time, or maybe for a day or so, we can try doing so. But in general, my suggestion would be avoid short selling, avoid shorting any outperformers, because no matter, we don't know how much time it is going to
But
correct.
today it dropped 2.5% almost. So if it's going to drop like this,
Yes,
what will
today's
happen?
right. So today's scenario was different. Today, I think the what I can say, the quarterly result was also expected, and whenever such things are happen, there are situations. So I mean, we can do that. I'm not saying that, okay, I'm not saying that, okay, you just don't do that. I'm saying avoid it. Otherwise, if you want to do that, we need to sit in front of the terminal and to uh, put on the indicators and then see if that forms or that comes under your setup. You can do that, but your entry and exit will be very sharp. You need to take a very, very quick decisions. However, when it comes to the investment purpose, you can do your analysis in the higher time frame, maybe daily or weekly basis, and then able to take a safe. It is kind of more of the relaxed way of investment. In this, yeah. Hope I'm able to answer your question.
Yes, yes, absolutely.
Okay, great.
But at the same time, whatever we
Yeah.
are looking at is the past indicators. I need to take some stocks and tell us where it is today and what is your reading based on the data. You're not predicting anything, but based on the data, how do you analyze the position? Like, okay, you told us all this, but today was a big drop in it. So what do you think about it? I mean, looking at the indicators, how do you correlate the indicators on system?
Okay, so maybe I'll spend maybe few minutes by looking the chart. I have personally not looked into Infosys chart today. Wrong one. So Infosys Limited NSE. So I am putting into daily one. So based on the learning so far, what is the, I will put RSI and then stochastic. So this is the day. Okay, I will make stochastic smoother by putting smooth 1:3. So this is what it is happening. So now, I mean, we have learned, I think, concept wise. So looking at this, especially the RSI. So sorry, stochastic. Stochastic is, no, it's kind of a made a negative crossover or the, downside. It cross the, blue line cross the red line. So it is making it, as of now, as per this indicator, it is showing a, um, kind of giving a sell signal. Okay. However, if you look at the RSI is also a down tick. It is also giving a sell signal.
So it will go further down.
There is a possibility. There is a possibility that it may do some more correction. If you can just look at maybe more additional indicator like called volume. So how is the volume? Yes, volume was also very high, as compared to the average volume. So by looking at these three indicators that we have learned so far, there is still a possibility of the further correction. So what it means that either we can do a short selling, or we can wait for, if we wanted to take an entry, that means we can wait for some more time so that market gives a signal from where it is, start moving up. That will be the right time to make a fresh entry. That means purchasing it stock. At this point of time, we can do the, I mean, we can think of short selling. Okay, if I look at the what is happening the weekly basis, okay, maybe if the any divergence or hello. Uh, yeah, I think there was an intermediate disconnection. So hope you can hear me. Can anyone please confirm?
Yeah, we can hear you now.
Okay, great. So yeah, so I think we were discussing about this Infosys chart. Yeah, so by looking at even the daily or weekly, uh, weekly chart is showing here is kind of a uptick also, looking at the stochastic. Okay, at the same time, okay, not only this, we need to see, consider few more factors, and that other factors could be, we should be starting with our very, very basic concept, and that is the, um, what I can say, support and resistances, right? So not only these indicators, so we can start with support. So if you look at here, at this price point, there is a very strong support. Okay, because there were two times, one time here and here, and this is the third time it is coming at this particular price point. So um, we need to wait what is happening. So if somebody wants to, for example, the short selling, we need to wait for the confirmation at this price point. So because what will happen, if it is breaking this particular resistance, then will be a strong possibility to have a further correction. Or if it is not able to break successfully, then what will happen, from this price point, it can go up also. So only the market means that particular time it is going to tell. So unless until we don't have a confirmation, probably we can wait. But considering this, I mean, current situation, because it is not yet reached at this particular price line, so there may be possibility that okay, it is going to retest first this level, and then after that it will decide it is going to go down and going to go up. That that moment we can able to take a better decision. Okay.
Hope it is
Okay,
clear.
this was good. Thank you.
Yeah, you're welcome. So, okay, so one more small point related to this one, which I just recalled. It is just we will be discussing the the future levels, but very important point that came into my mind, so I just wanted to share. So here, if you look at this particular price point where I had just made a strong support line, so it is like that. So if you have seen maybe some movies or sometime in the combat field, these soldiers are going into some operations and they are trying to break uh, you know any wall or maybe any door. Okay, so they hit that particular door or wall multiple times. Okay, so because if the wall or door is very strong, okay, they need to hit couple of times to break it. And if possible, it is very strong, made of kind of a bunker or very strong, it may not break also. However, what is the point to be noted is the number of times the impact is happening. Okay, there will be a high possibility of breaking that particular wall or door. Okay, so same thing, similar concept is also applied into the stock market. So for example, any support or resistance, so what happens that, okay, sometimes it breaks very easily at one go. Okay, but after that, when it is retesting the second time, again not breaking, third time not breaking, so that become a strong support or resistance. But after second, third and fourth, if it is again coming back to the same price point multiple time, then there will be a possibility again that, okay, it can break further. So when that situation is happening, at that time we need to wait. Okay, to decide, we need to wait before making a decision of entry or exit, okay, depending on the scenario. So same thing is happening because this is the price point, considering this Infosys chart. So it is tested eh, that this level, uh, it again one more time came at this level. Uh, it it has tested this level, and this is the fourth time it is going to touch. Okay, so why I'm suggesting to wait till this price point, that if it has broken successfully, broken down, then it can go further down. If not, then again it will say, it will show the signal that, okay, price is going to go up, and from there it will start moving up. Maybe at that point of time we can take a better informed decision that, okay, what we should be doing. Okay, and again, when we are going to learn couple of examples, okay, based on there is a decision sheet I have created. Okay, especially for anyone who is going to do the trade first time, there is some decision tree. So initially, I mean, it will take one or two times to go through the decision sheet and decide. It's like, for example, we are going to cook, let's say, what I can say, veg Manchurian, right? And we have nobody. Suppose I have not cooked any point of time in my life, and I wanted to cook it first time. Then I will watch maybe the YouTube video or somebody's recipes, and then I will follow the step by step instruction to cook based on that. And obviously, in that scenario, it is going to take a much longer time than the ideal practical time. So first time, for example, I need to cook veg Manchurian by following a somebody recipe. It may take maybe I can say 2 hours also. Okay. But once I cooked by myself couple of times, then I don't need to follow the recipe every time. It is kind of a by heart, or it is already built in my system. Maybe the earlier time which I used to took maybe 2 hours, I can minimize it in a half an hour, or maybe I'm just making a one plate just for myself, or maybe me and for my spouse. Maybe it will take a much lesser time also. So depending on how efficient I am doing my activities. So similarly in the stock market, if somebody is very new, then follow the recipe which I'm going to share on the decision tree, do the analysis, follow the cutting process, chopping process, mixing process, and then do the trade. And once you are becomes habitual, have a more practice, then you don't need to follow the each and every recipe. You can do it much faster. Okay, so because why I'm telling that, okay, initially it might be boring, but it is worth to spend time, spend step by step, so that we should not be making, I mean, we should be minimizing the mistake. Because I shared my, based on my learning, in the stock market, our money is like a life. Okay, so before thinking about earning the money, we should be thinking about not losing the money. Okay, it's the same thing. I give the example of the driving. So in driving, maybe reaching faster versus not meeting with accidents. So which one is more important? Obviously, the not meeting with this accident is the more important. Even it is going to be late. That is still okay, but we should not be making the mistake. We should not be encountering any accidents. Okay, and once we know very well about the driving and all, we can increase our speed and reach faster. So here, even if there is a situation or chances that, okay, it is going to go against our trade, that in the driving also we apply the brake. Okay, here also we can simply exit. So all these things we are going to learn in uh, the implementation main seminar. Otherwise, okay, let's come back to this concept about the bullish divergence and the bearish divergence. If anybody has any question, because this is the uh, one